Hello and a warm welcome to Talking Stocks. I am Gugulethu Cele. Also in studio with me, I'm joined by Peter Armitage, and this week is Khanyisa and Ngesi, both from Anchor Capital. Now they are the experts who will give us their insightful analysis into both local and global listed companies. This week we take a look at a global platform operator, Naspers. The company has its core operations in internet services and e-commerce. The company has been listed since 1994. Now they've been a part of the top 10 index over the last couple of years. Good to have you both, lady and gent. Looking at Naspers, one always thinks of the old version of the company, and it certainly has gone through some kind of metamorphosis since it listed back in 1994.
It has. I mean, it was founded in 1915, predominantly as a printer and publisher of newspapers and magazines. And as you've mentioned, it's grown into a global operator in terms of its platforms that it has, predominantly within internet and pay TV and print media. Internet predominantly in e-commerce, for example, your OLXs, which will be more familiar to people. Pay TV, your DSTVs, and print media, your newspapers and your magazines.
And maybe this company is huge, Peter, because we don't really grasp the concept as to how big it is if we look at all these segments behind us. Yeah.
I think just going back to what Khanyisa was saying, after the last results presentation, I was thinking about my personal experience with the business. In 1994, I wrote an analyst report on it. I think it was about 16 Rand a share. And they made 60% of their money out of the Huisgenoot and New magazines. And in this last results presentation, the entire media section of the business didn't get one slide. So that's how, you had a visionary Koos Becker taking it from the cash flows of those magazine businesses into the whole internet space, which we'll talk more about. But a South African business that's managed to get itself up into into the top 10 internet businesses in the world.
It's funny, maybe housewives have moved away from you and Huisgenoot now to looking and observing publications online.
Absolutely.
But let's take a look at the revenue segment. You did mention that media didn't even deserve a slide in its latest results presentation, but from a revenue perspective, where is all this money coming from?
Well, 72% of the revenue from the latest results actually come from offshore. Of total revenue, 58% comes from internet, coincidentally, and the rest came from pay TV and print. I mean, print only grew by about 1% year on year, as Peter has mentioned. Basically, not much to write about there. It's going through a really tough period. But if you look at the internet segment itself, which contributed the bulk of earnings and revenue, in there we have Tencent, which is a 34% owned Chinese Hong Kong listed company. It's actually the largest Chinese internet service portal within China. It has things like WeChat, and I mean WeChat has almost 400 million users worldwide. So it's one of the fastest growing social apps on the internet at the moment. It has online gaming, online advertising, e-commerce, etc. There's also Mail.ru, which is also a Russian company, also owned about 30% by Naspers as well. And then the rest is e-commerce. So that internet business, which is generating the bulk of Naspers earnings, is basically internet, Tencent, and Mail.ru.
Let's get into that Tencent story, because it is China, one of the biggest populations on the world, if I'm not mistaken. And we did recently speak to Bob van Dijk, the chief executive of Naspers, when they recently had their results. And this is what he had to say about the growth trajectory in the mobile internet usage market, particularly in China. Let's take a look.
China is a market that's now the largest internet market in the world. And it's growing faster than almost any mature market. But what we see is that there's several other of these very populous nations that are showing similar explosion in mobile internet usage, and I think we'll be on a very exciting growth trajectory as well. I think China is ahead of some other countries, but I think we see that same wave of growth coming out of other geographies as well.
Places like Indonesia, for example.
Indonesia is a good example, India is another one, and several other countries in the region.
They're very clearly, he's still very bullish on China. Indonesia also coming through as another market. Are we not able to grasp the compound growth that is coming out of the internet there?
Yeah, I think you've got developed markets getting to a stage where they've got kind of 60, 70, 80% penetration. And in the smaller countries, you're simply 10 years behind. So I think you've got, Europe and America sitting here. You've got China probably halfway along the path, and you've got Indonesia, India, Malaysia, some of the other countries which are still very early on. And I think if you go back to 10 years ago, Koos Becker's vision was for Naspers to be the choice share to buy in terms of global emerging markets, internet and e-commerce. And that's what they've been creating. So a bit like Google and these other big businesses, you've got the big engine, which is Tencent, which is now producing the cash, and then you invest in different countries and industries that might take 2, 3, 4, 5 years to reach maturity. And this will ensure that this company continues to grow for many, many years.
Well, the growth opportunities are there, but when it comes to valuation perspective, most analysts are split in half here. Some saying that when you buy Naspers, you get 10 cents and everything else for free, and others also still include the various other segments of the business as an added benefit.
Lots of work on that.
Exactly. So is this true, Khanyisa?
Well, it is true if you look at where valuations are currently. I mean, just taking a step back and talking a bit about the growth prospects, especially within e-commerce. I think what Naspers has done cleverly is that they've partnered with local players in these different regions. So they're actually cutting the time that they would have gone and done research in the different regions and put down a certain platform. And this, going forward, will actually help them reduce development costs, which are quite high at the moment, although they're tapering off. And what this will also do is help monetize the earnings early, in terms of if it were a 5 to 7 year story, it's now more of a 4 to 6 year story. And in terms of valuing that, I mean, estimates are anywhere between $3 billion to $12 billion in terms of the potential that can be unlocked within the e-commerce story. And I mean, obviously this is a long-term story. But in the valuations that we looked at, we have said, look, being very conservative and saying that the earnings accretion from e-commerce 4 to 5 years out would be about $3 billion, which is about 40 billion rand. At those valuations, it's still a very attractive story. So I don't think that people are not valuing the monetization of e-commerce. I think it's just that from where we are, because the possibilities are so endless in terms of how that can be monetized, you can have varying valuations from about 3 billion, as I said, at a conservative level, to anything north of $12 billion. That's worth of monetization.
Those are huge numbers that you're quoting there. But if things go wrong with Tencent, should we be concerned, especially if you take a look at the very strong correlation between the share prices of both companies here?
Well, there are risks, obviously, because Tencent is the bulk of the Naspers valuation at the moment, and obviously the main earnings driver. There are risks to anything that happens to Tencent, whether it's the global backdrop, macro-wise, in terms of what's happening in China. Obviously, anything that affects the Chinese will affect Tencent, so that can make it potentially volatile. And obviously, as you said as well, the share price of Naspers is highly correlated to Tencent. But I think if we look at the fundamentals of Tencent, even though it's grown phenomenally, the growth prospects are still quite there. I mean, there are very few companies at the moment where you have earnings compounded growth rate of north of 30% on the top line, let alone on the bottom line. So Tencent is definitely a growth story, and I think the fundamentals are still there for it to grow, in light of the fact that, especially in emerging markets, the penetration of the internet and the e-commerce still has a long way to go.
Peter, does this still leave you mind-boggled? You've seen the cycles, you saw the internet boom, but this one is a different beast.
Yeah, I think the internet companies in the world are completely different investments now. If you go back to 2000, there were 200, 300 small listed internet businesses all having a go and trying to gain a bit of traction and gain a bit of turf. We've now matured in the internet market, where there's about 5 big companies around the world that dominate the space. Those tend to now be making a lot of money, and that changes their lives. So I remember listening to a conference call with Pony Ma, the CEO of Tencent, a few years ago. And he pointed out that they had more software engineers in Tencent than the whole of South Africa. So if you took every single IT guy in South Africa, their IT staff was bigger than that. And they got to the stage with the cash that they were generating, where if a good idea comes up, they'll either put 300 software engineers on it and replicate it in 2 or 3 weeks, or they'll buy it. So the big dominant players who are generating the cash, I think, unless they're badly managed, will still be the big 5 players who dominate the space in 5 years' time, because the market's matured and you've got your big players up there. So it's an industry that's just evolved to a natural state of kind of, the good guys and the guys who make the money and manage the businesses the best have got there. But the exciting thing with Naspers is, you've got this kind of big core strong base, but you've got all these other add-ons which are still very, very early in their life cycles, which have still got to come through. And some of them will fail. So the Tencent is not the risk part. The risk is the other things they're trying. And Naspers has always been, in the words of Kursbeck, he used to say, let's throw a lot of jelly at the fridge and see what sticks. Now that's pretty damn scary if you're an investor. But Tencent, for example, stuck on the fridge. They spent $50 million for 1/3 of that business, and that's now worth $50 billion. You know, it's well, Tencent as a whole is worth $130 billion. So their stake, they made hundreds and hundreds and hundreds of times their money. But they also spent $10, $20, $30 million on lots of other things that are today worth naught. So it's a case of there's a space out there, you're inventing the future, you're being a pioneer, so you've got to have the gumption to go and put some money on the table and try different things and see what works. But when you get it right, the result is amazing.
Judging by what you're also saying, it does show that you do have confidence in the management, that there are a group of innovators who are willing to take the risks as long as there are rewards on the other side. But time now to get our experts to answer the all-important question: buy, hold, sell on Naspers. Khanyisa, the all-important question that leaves a lot of investors slightly nervous given the high valuations on the Naspers share price from a local perspective. Buy, hold, sell?
Naspers is definitely a buy, a long-term buy. This is definitely not a 2 to 3 year story. If you look at where the share price currently is...
it's expensive.
It's expensive at face value, but as I said, very few companies locally or globally will give you a minimum of 30% growth from an earnings perspective. And this is where we're at the moment, without even taking into account the growth prospects of all the other smaller companies and e-commerce that they're putting a lot of money into, etc. Yes, at face value it looks expensive, but I think when there's opportunities to get in at lower levels, you can take a stab at those. But Naspers is definitely a long-term hold. A
long-term play, even when the lower levels are 1,300 Rand a share odd.
Absolutely.
Exactly. So lots of nervousness there too, but buying into the growth story, I'm sure you echo Khanyisa's sentiments as well.
Yeah, it's one of our core holdings and probably will remain so for quite some time.
Would you increase your holding?
It's a very volatile share, so it's not for the faint-hearted, but we kind of religiously, when it comes off, we buy some more. I think if you look at a global internet portfolio, I'd probably have Google first. So Naspers is higher up on the risk-return spectrum. Google's the whole globe. Naspers is quite dominated in China. It's one country, and the rest of it is growing and exciting, but much higher risk. So it's a very different business to something like a Google. But it's in my portfolio and will probably stay there for quite some time.
Of course, Becker would be a happy man, as well as Bob van Dijk, but a long-term story, as we can tell, when it comes to Naspers. Despite it being expensive, get in for the long term. Well, that's where we leave it for this week, I'm afraid. Do join us again next time where we talk more stocks.